So there's a shift in lender behaviour. After a period where risk was to the fore, more lenders now are looking at their programmes from a performance standpoint. It's against the backdrop of falling volumes, falling spreads and falling revenues. More lenders now are looking at the revenue generated from their programme and looking at how they can enhance performance. This might be a question of lending in new markets, taking new forms of collateral, taking a different route to market, or alternatively changing provider. So if you're a beneficial owner considering re-entering the securities lending market or lending for the first time, the first key question you have to ask yourself is, why am I entering into a securities lending program? No beneficial owners these days are doing it for altruistic reasons. The second question they have to ask themselves is, what are my objectives around securities lending? What are my revenue objectives and what are my risk objectives? And once those questions have been addressed, it's then a question of questioning the providers and seeing who best meets my objectives as a beneficial owner. That mismatch of demand and supply of collateral is a trading question. When you look at what lenders are looking for when they lend their securities, they're looking for good quality collateral in return, they're looking for liquidity within their portfolio, and they're of course looking to get paid for that loan. Borrowers, on the other hand, particularly as it relates to collateral trades, are looking for loans of fixed duration. They're of course looking to pay as little as possible, and they're looking to provide lower quality collateral in return for that loan. So in terms of helping lenders meet that demand and execute trades that suit their requirements, it's a case of bringing opportunities to lenders. Fully explaining and fully understanding the drivers for those loans, fully explaining and fully understanding the risks inherent in those loans, and of course ensuring that you're negotiating the best possible return for your lender. Ultimately, as lending agents, the lender is our client, and it's in our interest to make the best possible transaction for them. Well, going into 2013, I don't expect a huge change in beneficial owner behaviour. I expect them to still be demanding of their providers, to still demand more transparency around their lending programmes, to still demand better reporting around the risks within their programmes, and also to want to ensure that their providers are on top of all the regulatory issues affecting securities lending today. So going forward, opportunity exists in areas that are very similar to where they exist today, particularly as it relates to emerging markets and collateral. Clearly, markets like Brazil and Taiwan have high barriers to entry, which has slowed down the entry of certain beneficial owners into that market. And while that remains the case, spreads for lenders that do participate in those markets are significantly higher than the majority of lending markets. The collateral trade has been talked about at great length currently and will continue to be the case going forward. So for lenders that actually participate in collateral upgrade or collateral transformation trades, there are a lot of opportunities there. The other area that I'd look at as a place for opportunity is it relates to service provision. The market's evolving and service providers are evolving their service offering. And for beneficial owners that are prepared to look at their options as it relates to service provision, there are opportunities there as well.